This is On the Money with Ryan Wheelis, financial advisor and the founder of Allied Wealth offices all around the Houston area. Is there political risk to our investment dollars around the globe with all of this uncertainty right now? Depending on if somebody goes back into office, well, actually, both people would be going back into office, whether it's Biden or Trump. Somebody's going back into office. But is there a political risk? Meaning, I think, is there, a dollar value worry around the globe? Are people going to be more interested in investing in the United States? Let's say if Trump is back into office, less interested with Biden in office. Is there a political risk to our finances? I think I mentioned this to you before, just in a phone call one day. My father, when we talked on Father's Day weekend, he asked me, should I be changing my investment elections because of the upcoming election? My question is, change it to what? Where do you go? Is there political risk right now with the election, Ryan?
Well, Spike, there's certainly political risk, and let's hit the nail on the head. I had a client a year ago tell me, "Hey, Ryan, because of the market, they inherited money, a cash lump sum of money. They're younger and they want to buy stocks." Okay. And so they said, because of the stock market risk with the election, I want to dollar cost average into the markets. And I said, don't do that. Don't do that. Really? Put the money in now. Okay. Well, let's just assume that we were going to invest the money in the S&P 500. All right. Just for easy math for the folks on the show. If that was the case, they missed a 23% return on all the dollars in the last 12 months. Why? Because they were fearful of what the election could do into the stock market in an election year. When the reality is, folks, the difference between a Democrat and Republican taking office in the election year and the inauguration year, the difference over that 2-year period, whether you're Democrat or Republican, is about 1.5%. That's it. So because of the fear, this person has missed out on substantial returns. And I've tried to convince them otherwise, but they're not having it, and it's just mathematically proven, right? So let's put that to bed. Be in the market. And as far as your father goes, Spike, he shouldn't do anything. He shouldn't do anything.
Well, that's what I was kind of wondering. It's like, where do you go? When people are asking me that, I'm wondering, are they asking, should we go to cash because they're so nervous? Or
well, in your dad's situation, whatever allocation he had before making that phone call based on his risk tolerance and, more importantly, his risk capacity, should have been the same allocation he had after he hung up the phone with you. Because who is in the White House does not have the the impact on the stock market so many people assume or think that it does. In fact, you and I have done this on the show a couple of times. Mm-hmm. If you go back in history, during an election year, the market's only been negative 4 times. 4 times, going back to 1929, okay? The 2 most recent ones were in 2000, Bush-Gore. The market was not negative because of the hanging chads down in Florida. The market was negative because the tech crash was going on, right, in the year 2000. Then, if you look at the next year that the market was negative in an election year, it was when the Obama-McCain battle, all right? Yeah. Did the market crash in 2008 because McCain didn't get in office? No. Did it crash because Obama got into office? No. The person in the White House had nothing to do with that. That was all about these adjustable rate mortgages coming due and the collapse of the dollar credit default swaps and insurance on bad mortgages. All that blew up, and that created a liquidity crisis, and that's what caused the market to crash in 2008. So again, 4 years in history, 4 times in history, going back to 1928, during an election year, the market was negative. So folks, quit letting that guide your investment principles. Your dad should be doing the exact same thing he was doing before the election year. End of the election year, it shouldn't change at all. All right. Who is in the White House has little to do with the markets. Now, the balance of power, who's in the Senate, who's in the House, who's in the White House, can have an impact and will have more of an impact than anything else out there. So balance of power is important. Okay. So watch that more than who is in the White House. Okay. Now, let's talk about the other risk, because the other risk to me, Spike, quite frankly, are downright scary. It's mind-boggling at how scared I have become of this stuff, and I'm not a fearful dude at all. I fly planes, I scuba dive, I go offshore fishing a lot. I mean, I live a pretty adventurous lifestyle, and I'm not going to change that. I'm not fearful, but I am concerned about de-dollarization around the world.
Okay.
And it's happening a lot.
I've
Okay?
heard this word, but I'm going to need you to explain it a little bit.
Well,
for me, if you don't mind.
de-dollarization is countries moving away from the U.S. dollar as the reserve currency of the world. Go ahead.
What is the choice right now for folks who are listening to the program? Because, again, I don't like to just stir up the worry and the concern. It's what do we do? What do we do if that is what folks are worried about? We are seeing report. This came from Axios about the de-dollarization and maybe not being as valuable. It's up to an election, which is 6 months away. What can we do right now?
You mean as far as preparing for it, Spike?
Yes. Yes. Yeah.
So what do? Well, I don't think you do anything between now and then. All right. But if Biden is reelected, I would strongly consider two things. One, I think you can expect a cut of Social Security benefits, whether you're going to get them or already receiving them, of about 20% starting in year 2030. Okay? Plan for it. There's ways to plan around that, and if you know it's coming and you plan around it and it doesn't happen, guess what? You've got the same amount of money or more. Okay? You got more income than you thought you were going to in the first place. So, the only thing that is bad about that is nothing because you have more income. All right? So if you hedge out the Social Security risk and the Social Security cuts don't happen and you plan for it, you've got more income coming on when that happens. Pretty cool, all right? The other thing you can do is you can buy some physical gold and silver. Now, I don't spend a lot of time talking about this, Spike. There's a guy on Wall Street. His name is Trader Vic, and he was a commodities broker. Guy is a legend, by the way. And he was at a conference I was speaking at. He was speaking at the same conference. And I asked him a question. This was back when the gold bug thing was really going on. Mm-hmm. I said, hey, man, listen, everybody's saying that, hey, you should buy gold and silver. Like take all your money and buy gold and silver. I mean, what do I tell prospective clients who are telling me they want to take all their money out of the markets and bonds and interest-bearing accounts and annuities and whatever else they have and buy gold that doesn't pay any interest, by the way, okay, at all right? So what do? He said, well, listen, we've analyzed this any way we can, okay? And going back to the Great Depression, if you have 10% of your liquid net worth allocated to physical gold and silver, in every scenario we've seen of dollar collapsing, and this is his words, not mine, the 10% allocation will swell in the event of a dollar collapse to be enough money to have the same purchasing power you had before the collapse happened. Meaning, if you had $2 million, your $2 million portfolio is allocated to 10% gold. The dollar crashes, all right, that $200,000 or 10% gold allocation you have, because 10% of $2 million is $200,000, all right, would rise to be about $2 million in purchasing power. Okay, so you're hedged with a 10% allocation. Now, make sure you buy American Eagle coins. Okay? Here's why. American Eagle coins are lawful currencies under the United States Constitution, and they cannot be confiscated. So that's a little tip and trick. All right. Now, personally, I have not allocated 10% of my net worth to physical gold. I will tell you, folks, I am strongly considering it. Okay. For the first time in history, because I'm worried about it. And if Biden gets back in office, I'm likely going to do it. And I'm coming out on a radio show saying that, folks. I'm worried about it. I really and truly am. So it's something I'm considering myself. So if it's something that keeps you up at night, folks, do it. Buy some physical gold. Don't do it in an IRA. Gold at your disposal, okay, where you can get to it if you need it, okay? And so, if Biden is reelected, I'm buying gold. If Trump gets back, well, he'd be reelected. So if he gets reelected, I'm likely going to hit the pause button on that and kind of see what unfolds, because I do believe President Trump in the White House is the right thing for this country today. Like him or not, again, they both suck, folks. They're both there's way better people out there that can run the country, but right now, that's what we got. Okay, and out of the two, I think that if you like your money and you like your wealth, I think the vote is easy.
What's the phone number again, Ryan?
Or 944-7555. Again, 844-944-7555. You can also check us out at retirenowhouston.com, retirenowhouston.com.
Sit down with your own financial advisor. If you don't have one, if you're worried about the elections, if you're worried about the recency bias, make sure you talk with someone and you have a plan in place. Right now, literally, is the time to do that. Call 844-944-7555. For Mr. Ryan Wheelis over there, I'm Spike Spangle. Thank you for listening to On the Money. We'll be back with a full hour of broadcasting once again next week. Thanks for listening.